Hello, I'm Gerri Willis, and this is a special edition of Open House, the show that saves you money. Today, we are all about protecting your money. Hey, it doesn't matter what your finances look like. Everybody needs a little help now and then. Here now to help us do just that, Doug Flynn, a certified financial planner, Gary Shatsky, the president of ObjectiveAdvice.com, and Laura Rowley from Yahoo Finance. Okay, guys. The economy, not so strong. Stocks in bear market territory. We've seen what's going on with the credit markets. Gary, start us off here. How do I keep my money safe?
Well, the question is, do you want to make major changes? And most people shouldn't. You have to take an inventory of what you have. And you have to ask yourself, how much risk do you have? And for many people, they're going to find out they have the right amount of risk. That doesn't mean they haven't lost money.
Right, and these are really complicated questions, actually, determining what kind of risk you have. Most families, they face tough choices in times like these. They're trying to decide what to do with their money. Doug, people out there are saying to themselves, should I contribute to my 401k or should I not?
Well, the question is, if you take away the money you're saving into your 401k, you're not going to have the same amount of dollars after tax that you would by putting it into the 401k. So if you're maxing it out at $15,000, if you stop, you might only have $10,000 of money to do something else with, and then you've stopped contributing to your retirement. I don't think your retirement is going away, so I would absolutely not stop adding to your 401k. These are the times you want to be adding, actually, for a long-term goal.
Well, and the stakes here are even higher than your 401k, the money you're going to use years from now, decades from now. It's about your bank now. Is your bank safe? Laura?
Well, I would also say from a psychological point of view, it's about your comfort level. So I've been hearing some people who traditionally invest in the market saying, I feel there is a recession going forward. I think inflation's going to take off. I would be more comfortable maybe owning real estate than stocks. When you're at that place, you need to talk to a financial planner. Or
a shrink. Right, I know a lot of people out there are really worried, though, about the money they have in the bank. Now, let's switch our focus from 401ks for just a second and talk about that money that you're using every week to buy groceries with, to pay your rent or to pay your mortgage. Doug, is your bank safe?
Well, it shocks me to this day that how many people still don't understand FDIC rules and how many people may have over $100,000 in a bank. And it's just very simple. You have to make sure you have below those limits in the bank. And should you be with banks that are sort of in the news that may not be as safe? I don't think so. You can drive down most streets and there's multiple amounts of banks to choose from. So I don't think there's anything wrong with that. But generally, if you're FDIC insured, even if your bank goes under, you're going to be okay.
And there's plenty of ways to expand the coverage. It's $100,000 for an individual. You can have a joint account and add another $100,000. You can have a self-directed retirement account for another $250,000. You can literally have millions of dollars of insurance, even at the same bank, or you can break it out to separate banks.
And of course, some of these limits will be changing likely, and I'm sure we'll be talking about that in the future. You guys aren't economists, but you talk to a lot of people. Do you think the worst in the economy is over, Laura?
I don't think so. I mean, I think you're going to see at least another 2 years, at least a year and a half, possibly 2 years.
That's so depressing for a Saturday morning.
I do, and I was one of those people 3 years ago who was saying this is going to be really, really bad. I think it's time to shore up your castle, increase your cash, make sure you got 3 months in the bank in case you lose your job. I do think it's going to be much worse than people expect because we have seen major institutions fall so far, so fast, and that's not what anybody expected.
Some people are recommending that you stop investing in your 401k and put your money in cash. Is that a smart thing?
For most people, that's probably the worst thing they can do. If you have to ask yourself, do you have enough cash? If you do have a sufficient cash position, 401k opportunities are annual. You can't make it up next year if you didn't max out this year and say, well, I just want to catch up. So you really have to kind of evaluate, do you have sufficient cash situation? And if the reason you don't want to contribute to a 401k is perhaps you've lost money, well, there are conservative investment choices in every single 401k.
But Doug, I'm worried about my job. Let's say that I'm in a business, an industry that is laying off people. Shouldn't I just, as Laura says, let's put walls around the castle. Let's throw every penny we have in a place we can actually get to it.
Well, it gets back to what we've been talking about all along, and they're the sort of core foundations of financial planning, which is you do have to have an adequate cash reserve. You've heard it a million times. But to me, it's amazing that there's so many people that not only don't have enough enough cash, they put their savings into the stock market. And then they worry. These are the things that feed right into the fear. If you have the right amount of money in cash, 3 to 6 months expenses, whatever you want to call it, you're going to be okay through times like that, including if you lose your job. You have a little time to get yourself situated. And then you should have some intermediate term investments and then your long-term investments.
Right. All right, guys. Thanks for your help. You're going to stick around, though, because we're going to have more tips for our viewers. Stay with us if you're watching Open House. To your debt, to your savings. We are helping you protect your money. With us today, Gerri Willis, the president of ObjectiveAdvice.com, Doug Flynn, he's a certified financial planner, and Laura Rowley from Yahoo Finance. Laura, I want to start with you. We're talking mortgages this segment. What's the #1 thing to do to protect yourself as a homeowner right now?
Well, make sure that your rate is fixed if possible, and make sure that you're paring back elsewhere if you're an adjustable rate mortgage so that you can afford that payment. I mean, I think it's pretty straightforward.
But it's tough now, Doug. You know, a lot of banks don't want to hang it. They don't want to give you a loan. If you're looking for a home equity line of credit, forget about it. They're not writing new debt. What do you do?
If you need additional debt, yeah, it's really tough. You have to look at your credit scores and know where they are. A lot of people don't have a clue as to where they are. If your credit scores are above 700, you probably don't even have much of an effect of all of this stuff going on because you can get credit. But if you're in that 600 to 660 range where you're sort of a moderate credit person, it's not like it was where you can just go in and sign your name and get money. It's a lot tougher, but you have to focus on paying your mortgage. That's the single biggest thing in terms of keeping the house. And if you have to sacrifice something else, then you do. And if you can't, you have to seriously consider alternatives of possibly selling. And no one wants to sell in this market. But what you'll
Sometimes you got to do what you've got to do, right?
Exactly.
Gerri Willis, tough choice. Do you buy now? If you can buy now, is now the time to buy?
You know, if you can buy now or you could wait, I'd probably wait. You know, very frequently the home purchase decision is an emotional one. And I have many clients that are saying, you know, I really want a place and I can't wait anymore. Well, prices have come down, but unfortunately, I think they're going to come down more. You know, it depends on what geographic area you're in, what the pressures are. But for many people, waiting some period of time might make a lot of sense. But bear in mind, a house is not an investment. It's a home first and an investment second.
I think some people might disagree with you who have really tried to
Then you have to wait.
If
it's pure investment decision, absolutely most people should be waiting.
All right. Laura, you know, you look at homeowners out there, they are beleaguered, right? I mean, they've watched the value of their home decline. They're worried about the stock market. They're worried about losing jobs. What's your advice to them?
Well, you know, I think you have to take a broader perspective. I recently interviewed someone who consults with people on life's misfortunes, the broad array. You have to remember, money is one of the easiest problems to fix. If you have a sick child or you have health problems yourself, that's much harder to fix. You can spend less, you can get a second job, your children can work, you know, mowing lawns or babysitting, whatever it is. You have lots of things you can do regarding your spending and your saving. Yeah, you're going to have to make some really hard decisions, but it is one of the life problems that is actually the most straightforward to solve.